What's up, YouTube? I'm back. It's Tuesday morning, not Monday morning. I didn't make any moves yesterday whatsoever. I kind of just wanted to watch the market. A few stocks that I had, or that I had interest in getting a few more shares in, such as BBAI. They had earnings, NVTS also. Well, not yesterday, but prior. So I do have 200 shares of NVTS, or Navitas Semiconductor, which is an NVIDIA partner that I can pull contracts on, which I will do today. I do plan on getting some more of the stock. It's at 650 right now. My average cost is 670 so I might buy some more, but we shall see. But for right now, I'm just gonna jump back in with Open. Like I said, I feel like Open is gonna hover around $2. Because I feel like there's momentum behind it. I don't think it's going to balloon to $200 or whatever, but there's enough momentum to keep it around $2. I have 300 shares that I can do contracts on. I already have 5 contracts sold, or 5 positions, 7 contracts all the way out until the 29th. So like I said, my whole goal with these stocks is to get enough to where I can do a 2x2 by 3x3, meaning 2 contracts first week, 2 contracts second week, 3 contracts third week, 3 contracts fourth week. But by doing that, what that allows me to do, and you can do it with a minimum of 400 shares, it allows me to do month-long contracts with weekly expirations, because I always have a contract expiring on the coming Friday, but when that contract expires the following Monday, because I have contracts for every other Friday already, I can just go out a whole month, so it's like I'm doing month-long contracts all the time, but I'm doing it on a weekly basis. If I need to roll a contract that's not going in my favor, then I can roll it out a month, collect more premium, and just sit on the stock. Like I said, all these stocks that I put my money into are stocks that I believe that I want to hold long term. So that's the play for today with Open. So we're gonna go trade options, and we're gonna go out to September 5th. Now, in a month, Open may be at $2.50. It may be at $3. I don't know. So what I'm gonna do is I'm gonna do 2 contracts for $2.50. I'm gonna do them single. So I'm gonna do review, swipe up. That's 1 contract down. That's $28. Boom. We'll trade options again. We're gonna go out to the 5th again. We're gonna do the same exact thing. We're gonna go do 250, review, and then swipe up. Now I could be greedy. I could go and do like this. I can go, let's go edit. I can go 0.3. Should be like a medium fill likelihood, review, but I still get $29.36. Swipe up. That's 1 more contract. And then for the last contract, I'll go trade options, September 5th, and I'll do a $3 call. And we'll do 1 contract, and we'll do 0.1C8 medium fill, which means it'll get filled. And just like that, we've done, I believe, $78 in less than 5 minutes. 3 contracts. I have 1,000 shares. Like I said, I have 1 that expires this Friday. It's a $5 call. Of course, I'm definitely not going to get assigned. And then I have 2 that expires on the 22nd. Now, the reason why I did those contracts individual is because I don't want to be forced, which it may actually be the case. Let's see. If I go to trade roll position. Okay, cool. So the reason why I was trying to do it individual, and I just kind of learned something, is because I didn't want to be forced to, if I had to roll one, to roll both. But it seems as if it's the same thing. Once you do the same expiration, same strike price, it just groups it together. So now I know that going forward, then I'll kind of be able to pivot. So next time I'll probably do a 250, a 3, and then a 350. But it's fine. Still, at the end of the day, I've made 30, 29 on that. So that's $60 basically. And then the other 17. So that's $78, almost $80. Just that quick.